All right, so the topic is coming up, the presentation slot that is related to opportunities and risks for FIs in interacting with digital assets. Our presenter, Myriam Ben Sayeh, she's a head of crypto risk and innovation from EEMEA Mastercard. Can we have a big round of applause for her?
Hi, everyone. I think that I'm standing between you and the lunch, so I'll really try to make it very quick. But I would like to ask you a few questions. Who here work in the banking sector? Okay. Oh. Not exactly, but okay. So we have few. And who would consider buying crypto from their bank if this offer was available? Okay, great. Who is already owning crypto today and would consider, okay, amazing. Apparently we have a big investor here, but would consider storing their crypto into their banking account if it's possible to have it under the bank custody? Yeah? You would, okay. Who is owning crypto and would like to use their card to be able to buy goods and services from any merchant? Or would consider buying crypto if it was possible to spend the crypto with any merchant? Yeah? Okay, few people, amazing. So this is what I want to tell you about today. Like really the subject is what are the opportunities today, a little bit touching on the risk as well for financial institutions and in dealing with digital assets. And by the way, my name is Myriam Ben Sayeh. I'm leading crypto risk and security innovation for Mastercard, looking at Eastern Europe, Middle East, and Africa. What I would like to insist on is that today the banking ecosystem is at the heart of crypto. And this is something that is very obvious, but when we speak to banks, I usually get a reaction like, we are not really involved into crypto. Crypto is very risky. We're not into that. We're not touching that, right? It's not for us. But what we tell them is that basically whether they want it or no, and whether they know it or no, they are today dealing with crypto because their customers are buying crypto. And in UAE in particular, we have one of the highest crypto adoption in the world. We have 25% of people in UAE owning crypto and having crypto wallets, right? So for them to be able to buy crypto, they need to convert fiat money into crypto. So they are using their cards, they're using their accounts, they are buying crypto through exchanges, sometimes through DeFi protocols, using them on the market for different purposes, sometimes and most of the time for investment, but sometimes also to buy things from e-commerce or to make payment, and sometimes cross-border payment is an amazing use case for crypto because it comes as at a lower cost. Sometimes also it is used for illegal purposes, right? Because crypto can be associated as well to money laundering and some of the illicit activities because basically because there is a lack of KYC from the exchanges and the DeFi protocol. 50% of them is apparently the estimate don't have a proper KYC protocol in place, which means that anyone can use today their fake number and a fake name to be able to open an account with an exchange, and that's the perfect way to launder money, right? Because there is no traceability between at least between the banking sector and between the exchanges, so that we are able to link crypto to an identity. This is, by the way, maybe 2 to 3% of all the crypto that is today circulating in the world, but it's a risk that the financial institutions have to be aware of, right? Then that crypto is again exchanged from crypto to fiat and then coming back to the banking account. So at the beginning of any crypto transaction and at the end of any crypto transaction, there is a bank. And this is why banks today have to care about this. So I touched upon a little bit the risk, right? But today there are tools as well that enable to mitigate those risks. And this is really what I want to insist on. But today, I think the dimensions of risk are very, very clear. There is a lack of transparency in the crypto world sometimes when it comes to linking identity to crypto. Like crypto is traceable, by the way, on the blockchain. We can see everything. It's just that we need to be able to link that to an identity, and this is what is sometimes lacking today, because there are exchanges around the world and we are in a global economy. So even if we are in UAE, of course, we can buy crypto from any exchange in the world that are not having any kind of KYC protocol. They are not necessarily compliant. They are not necessarily licensed, etc. And this is what creates risk. And risk of money laundering, risk of fraud, risk of scam, so different levels of risk. But today there are as well different blockchain monitoring tools that exist that enable to, one, understand the crypto exposure, and that's very important, and two, understand what is the level of risk associated to it. And there are like very, very good tools today to qualify the risk associated to each transaction. They give you a risk score in real time, etc. And this is what we tell banks. We encourage them to use those tools, because this is basically the perfect way to protect yourself, but also that's also how you can deal with crypto in a safe way, right? Because sometimes banks block crypto altogether because they are not able to understand what is the level of risk associated to it. But if you have that understanding, then you could improve your approval rate, and banks love that because it's still, you know, cross-border transactions. They're improving their traffic in general, right? So this is a little bit about the risk, but there are also a lot of opportunities for banks. Today, banks are concerned about the risk of disintermediation and about outflow of funds that is going from banks to crypto exchanges to DeFi protocols, right? And in the context of people buying crypto and holding crypto, and most of the people today are long-term holders, these funds are leaving the banking ecosystem and not necessarily coming back, right? So this is something that the banks are really concerned about. But more importantly, I would say today, with an exchange or with a DeFi protocol, you are able today to do things that usually you are able to do only with a licensed financial institution. You can invest, you can borrow money, you can send money, you can do a lot of things, right? So the risk of disintermediation is real today. And there is a concern also around their customers interacting with potentially risky crypto exchanges. So that's the second concern. But most importantly, there is an opportunity there of revenue generation, because people want to buy crypto, and there are studies today that showcase that 80% of people would consider buying crypto if they could do it with their bank, because there is that safety around it. Like the custody is under the bank, so I don't have concerns around how will I manage my keys, what happens if I lose it, what happens if I am hacked or something happened to my wallet. So if it was under the custody of the bank, there will be much more comfort around buying crypto, and this is where the opportunity lies. And this is for some banks, for example, who are interested into getting new to bank customers, etc. So attracting younger demographic tech enthusiast people is a real opportunity, right? So we've done a study, and it was in LAC, and we identified what customer would find very valuable, right? So customers today are looking at real-time crypto conversion, being able to buy crypto, convert fiat to crypto, crypto to fiat in an instant, and not having the headache of on-ramping, and sometimes the card is accepted, sometimes the card is not accepted. So it takes sometimes time. So the user experience today when you buy crypto from exchanges is not the best, right? So being able to have a very fast real-time crypto conversion is considered as highly valuable for 80% of people. Making payment using crypto, so using cards to be able to buy anything from Amazon, for instance, is something that they find valuable. Diversifying the investment portfolio, so for the people who are working on wealth, today there are a lot of banks that are considering adding crypto as an option. So you can buy stock, but you can also buy crypto, something like something else, like stable coins, etc. Rewards is a very also interesting area to investigate. So because people want crypto, so why not giving them, instead of cashback or instead of points, crypto that is that will grow in value, right? So it's eventually, sometimes not, by the way, but that's also something that the customers are really looking at, using the cards at ATMs, and fast digital onboarding and easy one are the things that today are top of mind for customers. So these are the use cases for banks that could be considered. One of them is custody and how to keep basically in a safe environment the crypto of the customers with the wallets that are custodied by the banks. You have trading, so enabling customers to buy crypto, to sell crypto. You have rewards and loyalties, I've just talked about it. Spending with cards and transfers, and maybe in a little bit longer term, deposits and loans. And this is only the beginning of what banks can propose to their customer when it comes to digital assets. So how many of you know that Mastercard is associated to crypto? I don't think a lot of people think about Mastercard when they think about crypto, right? But Mastercard has been in the crypto ecosystem now for a long time, for a few years now, with different acquisition in the crypto space and different services and an offer that is articulated around strategy and design. So we have a team of consultants that help not only financial institutions, but any institution who wants to have a crypto strategy, designing their strategy with a launch pad that enable them to very quickly do prototypes and get things that are ready for implementation. We have different crypto flow programs, so we enable crypto loyalty and rewards. We enable also, so we have a program called Crypto Cards, maybe you heard about it, that's probably one of the most visible, I would say, offer that we have, where we enable users to spend their crypto within any merchant that is accepting today Mastercard, which is basically every merchant in the world, right? We enable also buy-sell hold of crypto through partnership with custody providers. And we have different other programs touching upon the tokenization of digital and real-world assets and commercial deposits, etc. We have also different compliance and monitoring tools that enable customers and especially banks to interact with crypto in all security. I think I've already shared what I wanted to share with you. Is there any question? Yeah? Sure. I don't know if I have time, by the way, to take questions. I think I'm in time? Okay, perfect.
There's some more clarifications like how Mastercard is like playing a role like a Bitcoin, whether you, since it's like a credit base, whether you can create money using?
No.
So
we are not in the issuance of the cryptocurrency. So our objective when it comes to crypto is really to instill the same level of trust when dealing with cryptocurrency as you would be dealing with any other currency, right? So we have a security solution around crypto, and we have access also solution. And so like, for example, enabling on-ramp and off-ramp on exchanges. We enable spend as well through crypto card. We enable banks to propose crypto-related use cases to their customers, but in a trust environment. So this is what we are doing, but we are not into the issuance of cryptocurrency, of course.
So you are not involving in the part of that. Fine, thank you.
Hi, Myriam. This is Sayeh. I'm from Mashuk Bank. Well, my question is, do we have any Mastercard-powered debit card or something related to crypto right now?
Yeah. We have crypto card program with two different constructs. The first one is you would have, for example, a partnership with an exchange, and that card will be co-branded between the exchange and the bank, and it enables customers to spend their crypto in real time. What happens in background is that whenever I go, for example, to buy crypto to buy something from Amazon, I'm giving the order to the exchange to sell the crypto, right? And then I'm using fiat, but it's in real time. Using fiat to be able to do that transaction. So that's the first construct. The second construct is we work with custody providers. So if you don't necessarily want, for example, a co-branded card, you want yourself to be able to have your own banking card, then the foundational layer for that is custody, right? You want to be able to two things, like to own the crypto, and that's like mainly the custody, the storage of the private key, etc. And you want that capability of converting fiat to crypto, crypto to fiat, right? So you can do it, and you do it, by the way, in partnership with custody provider. You don't necessarily have to invest into a custody infrastructure or something like that. Usually what we recommend when you want to do a crypto card with your own custody, or at least a partnership with a custody provider, is probably to have buy, sell, hold as well of crypto. Why? Because most of the banks today are more comfortable having closed loop use cases. They don't necessarily want to open into crypto coming from exchanges, crypto going to exchanges. So you want first crypto into your wallet and then spending that crypto, right? And in this construct, then you can buy your crypto from your bank. You can store it into your wallet, which is under the custody of the bank, and then you can spend it through your crypto card. And you can also have a crypto reward program running up in parallel, so you start having an entire offer around crypto. Sure.
Hi, Myriam. My name is Salman. I have a twofold question. First is around risk. So as you probably know, with leverage trading on crypto platforms, the leverage amount can be a lot higher than traditional trading platforms. Yeah. Can be times 100 of your initial investment versus maybe times 20 or times 50. So what would your plan be if Mastercard was to get into that sector of managing risk around leverage trading? The second question is a more high-level question. Obviously, Mastercard works specifically with main core banks working in the SWIFT system. Now there's a huge conversation talking about alternative banking payment systems with the BRICS summit next week. How do you see cryptocurrency more widely working as a bridge between these two parallel banking systems in the future?
Oh, okay.
Yeah.
These are two interesting questions. So the first one, I'd say that we are not really today working. So we do have an offer for exchanges, for fintechs, etc. But our main offer is with banks, right? So we're not really looking at these things, at least for the moment. We have use cases that empower banks navigating the crypto space and the crypto economy by proposing, for example, crypto to their customers, etc. So we're not really into like leverage, and this level of risk is better managed, I think, by other institutions. At least my very personal opinion. On the second part, and this is something that comes like quite, it's a question that comes very often. And if I understand it correctly, I think you are also, you want to understand what is the position of Mastercard with an alternative kind of a payment ecosystem today that could also represent a risk of disintermediation to financial institutions, right?
Yes and no. No in the element that how does crypto work as a bridge between these two parallel banking systems that are coming, right? Mastercard generally works with SWIFT core banks, uses the SWIFT messaging system for that. Now you're seeing a parallel sort of banking setup being in process. Yeah. I want to know specifically how you see crypto as a potential bridge between these two banking systems.
That's a good question. So I don't think we have currently an initiative of bridging. Right. So what we are doing, for example, in a maybe more high level, is that we have the multi-token network today, which works as a, if you want, it's a network across different blockchains, right? And which enable, if you want, to have a certain level of trust around payment in between, like enabling interoperability between different blockchain ecosystem. Looking, for example, at identity. How do I make sure that when I'm sending money or I'm receiving it from a trusted identity that has been KYC'd, etc. Looking at standards, looking at consumer protection, things like that. I know that it's not exactly answering your question, but this is probably the best or the closest example of initiative that we are having today, where we are trying to bridge different, if you want, infrastructures and different systems to enable these things to work together.
All right, so can we have a big round of applause for Myriam?
So I would like to call Mitali to give certificate to Myriam. Come on, everyone! Huge round of applause for Myriam and the insightful session.